So good morning, everyone. My name is Simon Nix, my partner here at KPMG in the Isle of Man, and welcome back to our penultimate webinar of the Preparing for the New Reality series. We do appreciate that many of you are webinared out. There has been a significant increase in the amount of choice out there, but thanks for joining us very much. The usual housekeeping: if there are any problems with the connection, please just click the reconnect button at the top and it will bring you back into the virtual room. Any questions, please feel free to put them in the chat box or email us on IM. So, how's your week been? Well, it was fantastic at the weekend to see charity and community events restart. Over 100 other people. I spent my Sunday walking up North Barrule, Snaefell, and finally Benny Pot in the Manx Three Peaks with the Children's Centre. I was probably less chirpy on Monday morning as I could barely walk. It did make me realise I hadn't taken advantage of the lockdown regarding exercise. But here at KPMG, most of our staff are now back in the office, despite us offering increased flexibility around the 1st of September. It's proven that many of our guys actually really did want to get back to the office. And we continue to see real interest in moving to the island, with our tax teams talking to immigration lawyers on a regular basis, and a lot of interest generally off island in wanting to understand us and the island and what it offers. So certainly our new video conferencing equipment is being tested. Onto more economic factors, as we alluded to last week. Rishi Sunak provided us with his updated summer statement, which had some interesting additions, some of which, of course, have implications for the Isle of Man, such as the 5% VAT in hospitality. But there was news yesterday that the UK economy has rebounded much slower than expected, unfortunately, only growing 1.8% in May. And of course, we will never forget the 20% drop in the previous quarter. However, the FTSE seems to have recovered quite quickly from its sharp dip ahead of that. I guess, having heard from the UK, we now wait on the Treasury Minister's update this month. However, from our discussions, the local economy does seem to have bounced back relatively well, enjoying the relatively free movement, I guess, around the island compared to most countries. For me and for many of our clients, the big concern now is around the international economy on the Isle of Man. And it fared well during the lockdown, but there are concerns around the knock-on impact of COVID on global markets, and I guess the continued trade wars which we see with China, and of course the announcements around 5G equipment in the UK yesterday. So there's no doubt that there's politics going on, there's COVID, and there's all sorts of other things all contributing to recessionary pressures, which are going to be hard to avoid, I think. Closer to home, of course, we are now, I think we're day 56 today without a case. Fingers crossed we complete the day at that number. And the biggest news, of course, is that the border policy has lowered to stage 4, meaning the residents can leave and return to the island from July 20th, as long as you self-isolate on your return. The thought of self-isolating for 2 weeks in your house probably doesn't seem that big a deal now, whereas it would have done several months ago. It will undoubtedly be an emotive decision, but another step towards normality for the island. Certainly emotions were flying high in our household yesterday when EasyJet cancelled another one of our flights as we tried to rescue our summer trip. So the flight links are certainly challenged at the moment. But on to this week. When we first looked at doing a new reality series, I always wanted to do this session to talk about the consumer and what do we think those future trends look like. Particularly given I had the chance of reading a fantastic report from the firm. Whilst I didn't know at the time that the person delivering the presentation today would actually be the person who did the research and wrote the report, I'm absolutely thrilled to be joined by Katherine this morning from KPMG Nunwood, who is based in the UK. Katherine will be sharing a summary of the report, and then we're going to open up for questions following that with a very good panel that I have in the room with me today. Again, another helpful point whether we can move around the island, and actually we've got our panelists in the room and we can see each other, which is great. So I'm really thankful to be joined by Danny Scott, CEO and co-founder of CoinCorner, Sam Tipper, business development from CoinCorner, and Chris Gledhill, CEO of the software firm PDMS. So this week's webinar is 100% live. For those that hadn't realised, not all of them have been, because we have had some pre-records with cross-Atlantic videos and all sorts. But please do feel free to send in your questions, because we will be able to answer them live this week. In conjunction with the government, we performed the first round of economic assessment for the Isle of Man during COVID, and many of you will have answered our surveys, both corporate and household. It became very clear that the interviews and the data we're all talking about how customer trends have dramatically changed, both internationally and domestically. Everything became much more digital very, very quickly. The banks saw a surge in contactless payments, and no one really visited the ATMs. Regulators and financial institutions accepted alternatives to wet signatures and paper forms. For me, I guess this was a step in the right direction, and one that many countries had adopted much quicker than we had. And I really do hope that we don't revert back to the old ways. But I'd now like to hand over to Katherine, who will take us through KPMG's research in this area, and will share her views on whether customer expectations have changed for the good. Over to you.
Hello, can you hear me? Good?
Yeah, absolutely.
Yeah, perfect. So thank you. Good morning, everyone. Thanks, Simon and team, for the invitation. It's really a pleasure to be here to share our findings. As Simon mentioned, we've been through so many changes in the past few months, and actually it sometimes feels like we are in this surreal world or a movie with everything that's happening all over the world. It has certainly been very challenging, and we are living through these unprecedented times. And I'm sure that many of us have heard about unprecedented times so many times now, but they really feel like they are. We have seen that we are going through so many changes in society, in the economy, but overall as humans and as consumers, as we will see in this report. I'm really glad to hear that the Isle of Man is back to normal, or almost back to normal, so that's good news. However, in some countries, as has been mentioned, this is still challenging, and we are still struggling to get out into normal, or even into the new normal. So at Nunwood, KPMG Nunwood is a research and insights part of the customer team, and we look into customers and we try to understand their motivations, their needs, and work around customer experience. So this report is aiming to understand what these customers are now feeling in this whole situation, how they are feeling towards businesses, towards what is happening to them as a consequence of COVID, and the interactions they are having with many different industries at this point. It was also interesting to see that countries are behaving in different ways, just because they are at different points in the COVID curve, and also because of different cultures and realities. I will point out a few things around that during the presentation. As a very high-level summary, in this slide we can see the three main findings that this report is showing us. First, we are facing a very strong economic impact. In many places, in many countries, we are talking about recession already and what will happen in the future. And this will definitely have an impact on consumer behaviors, with them being a lot more cautious about how they are spending and what they are spending on. As a second point, we have the digital part of these changes. There has been so many hypotheses about what will happen with the digital shift, if people will turn more into digital or not. And we will see a little bit of how this has turned out to be. Basically, people are looking for ease of interaction with different companies, and they are now valuing more interactions across digital channels, definitely. This is something that will continue to happen as COVID continues, but it will stick with us. In many cases, it will stick with us in the future, as people are really more comfortable to go into online channels and interact with companies and businesses. And the third point is around value and trust. So consumers are really placing more value into those companies they can really trust. And trust is no longer about a single metric or a single point. It's now becoming more complex, and it has many, many dimensions attached and associated to it that we really need to understand if we want to instill confidence in our consumers, in our clients. Next slide, please. Just as a background of this research, we looked into 12 countries, as you can see in here, from Asia to Latin America. We did some research in Brazil too, just trying to understand the whole variety. As I mentioned, countries are at different points in the COVID curve. Some of them are already easing, some of them are still in lockdowns, some are going back to lockdown. So it's kind of looking at everything, at every single point of view. Next slide, please. And this research was done between the end of May and beginning of June. And the interesting thing is that we are currently continuing this research, and I will talk about that a little bit later. But basically, we are doing this field work every 2 weeks or so, just to try to understand how things are moving across time and have some trends and comparisons. So by August, we will have a second report that will complement this one, and we'll try to look into more detail at some points and also see how things are moving across time. We also look at a series of sectors across sector analyses. We had some deep dives on specific sectors like retail or banking, trying to understand what consumers are feeling. And from the next report, we can see also the travel industry and the leisure industry, so restaurants, cafes, etc. Next one, please. Okay, so to start with point number one, as I mentioned, economic impact will be quite a big problem and challenge that companies will need to face. On average, 43% of consumers are feeling financially constrained as a consequence of COVID. And this is a very big proportion. Just thinking that people have been furloughed, they have lost jobs, members of the family have lost jobs, or they have suddenly seen their sources of income vanished. For example, in the leisure or travel industry, this has really had a very profound impact on them. And this, as a consequence, is having a very big impact on how they are spending and how they are thinking about the future. The segmentation that you can see in this slide is taking into account not only the economic factors and how they are feeling economically, but also psychologically, because many people are having trust issues now and they are feeling overwhelmed or anxious about their financial futures. And that's how we came with these 4 segments. It's very interesting to see that countries like Germany and France, they are quite stable and they are mostly on the financially secure part of this segmentation, whereas you have countries like Japan, who are feeling more sensitive or more anxious and more uncertain about the future. Then you have countries that were really hard hit, like Italy or Spain, who are really feeling on the overwhelmed side. So they are still struggling to get out of these financial struggles they are facing. And it is also this kind of situation is having an impact on how they are spending, and many customers are feeling less inclined to pay high premiums for products or even nice to have experiences. So they are really thinking 2 times before making any non-essential purchase and deferring these kind of non-essential purchases over time. We expect this to happen for some time now, and actually almost half of people are thinking that COVID will have an impact on their personal lives for at least a year. So that's also quite a big proportion, not only financially, but in the ways they interact with other people, in the way that they behave, even wearing masks, being social distance. So this is having like a more profound impact on how people see themselves in the next year. Next slide, please. This, of course, as a consequence of these people feeling more financially constrained, as we mentioned, has a direct impact on how they are considering purchase drivers. And of course, as a consequence, value for money is the most important one. We kind of tend to think before that people were more willing to trade price for a better experience. And this has always been the struggle of companies trying to improve customer experiences, even if they had to charge a little bit more. But it feels that for the foreseeable future, at least for this year and some part of next year, because people are thinking 2 times before making any expenses, value for money will be such an important topic for them, and they are classifying like their behavior and their products purchases like between essentials and postponables, and trying to classify the importance they are placing on value. We can see also some variations, of course, across countries. Spain, Brazil, Italy, which are countries that I mentioned were really hit by COVID at the beginning. They are placing even more value for money. Value for money is such an important issue right now, just because they are struggling financially. But it's changing over time. We can see, for example, that the UK, the value for money topic has been increasing over time when we saw the latest data this week. So this is something that is continually adjusting and that can change over time. Our main takeout of this economic impact will be that definitely organizations are starting to rethink their businesses and operating models, just because they are trying to adjust the value for money topic for customers. And this doesn't seem to be a short-term margin dilution, but it's something that will stick with us for some months to come. And it's really important for us to understand, where are we in this value for money curve? Are we really giving customers where are we in that space? Are we giving them what they want? Are we giving them what they need? And how we can adjust this operating model to adjust to their own needs. Next one, please. So the second topic is digital impact. And as I mentioned, this is not new. People have been discussing how digital impact will have such profound effects on customers. Will COVID just push forward every single change that companies were already thinking about? And it's really interesting to see that this is true, but it's also interesting to see how it's playing around different segments of consumers, like age differences, for example. This COVID situation really put customers in a very difficult situation at the beginning. Customers really felt they lost control of the interaction, of how they were communicating with companies. Stores were closed. It was not easy to get handle of different companies like airlines. So this put them in a difficult situation where they didn't know what to do. And those companies that were able to really react quickly and give them the tools that consumers needed were the ones that were best off, or are the best off by now. Some of the things that people are really feeling is that innovative ways of interacting with them is having a better result with customers. So one interesting finding from this chart is that there's a shift, an increase in website and app use, and this is across all ages, which is very surprising. Even all, the older groups, so 65 and above, are switching more into website, are starting to use, mainly for the first time, websites just to find information or understand what's happening with companies. But the interesting thing here is that even though the younger group, so the 18 to 24-year-old, they are already digital, they are already in this space, but the middle group, which are the 24 to 45, they are finding new digital channels. So before they used messenger apps such as WhatsApp or Telegram or WeChat in China, they use these chats to talk to their family and interact socially. They are now finding out that they can also talk to businesses through these channels, and there has been an increase in the use of these apps. The same with social media. Many people use this only to find out about their friends or interact socially, but now they are finding out that social media is really responsive when companies are trying to interact with them. So we can see an increase on these channels, on these ages, and it feels that this segment, that 24 to 45, will stick with these channels. They have really seen response and positive feedback. So therefore, they will be planning to stick to these channels more in the future. As a personal example, I use messenger apps, social media, and it was the first time during this period that I actually interacted with a company and bought a product from them via WhatsApp. And that was pretty amazing because before I think I've never thought about it, and it worked really, really quickly and really well. So many people are starting to think, okay, this is the future and this is working fine. So the question now for us as companies are we on that space? Are we able to habilitate these channels for these consumers and give them the best experience we can? Definitely the banking industry has been challenged with this, and one of the main findings in the banking industry for us was that customers are now expecting a really seamless omni-channel experience. They were used to going to the branch to do any interaction or talk to people in the bank. But nowadays that they were more constrained about this, they were turning into website and apps. And there's been a very big increase in how they are using these channels for normal transactions, and they are finding it quite easy. But it's also that they are now expecting, if I'm going to the branch, I'm expecting to talk to someone, get information. I'm expecting the same kind of service on websites, on apps, on the phone, on web chats. I'm expecting this experience to be seamless across all channels and to receive the same quality across all of them. So one of the main findings for banks, many banks were already working on this strategy, how to turn more people into digital, as many industries, but in the banking industry, it's working really fine, and people are more happy to interact now digitally. The main issue now is to secure digital. Cybersecurity will be a big issue now because people are turning more into digital, but they are also more concerned about data safety, and we will see a little bit about that later. Another thing is that digital has been also a big challenge for insurance, and insurance usually tends to be a very face-to-face industry where you are talking to a broker or to someone who will advise you. And when we were talking to the experts on the insurance industry, they were saying this is the time where we are forcing ourselves now to move forward and turning to digital channels, even by, I don't know, having FaceTime or having any kind of digital calls where they can see each other but don't need to be in the same room, don't need to be in any in the house or in any store. It can be all done digitally, and also facilitating digital processes like claims that can be done fully online. Next slide, please. And as we are talking about digital and how this is having a profound impact and people are really expecting to work across channels, this is also having an impact on how people are paying. And we can see in this slide really clearly how digital wallets are on the rise. Because of how people were expecting not to have any contact with money, they are expecting safe, contact-free options to pay, also coming from the stores. People are relying less and less on cash, and they are relying more and more on cards and digital wallets. And this is definitely a behavior that will stick with us in the future. People are just getting more used to this kind of payment options. It's interesting to see that across this study, the UK is behaving as a norm. It's the average. We haven't seen the UK performing really surprisingly above or below the average numbers that we are showing in this presentation. But there are some other countries like China or Hong Kong who are showing different signs. For example, in China, we are expecting people to use digital wallets. Like superiorly, 62% more of people will be expecting to use digital channels more in the future. And this is with a society that is almost not cash reliant anymore. This will just push it forward. The same is with Hong Kong and Brazil. We are expecting about 50% of people using more these kind of channels and digital payment options. This is very closely related. In the banking industry, we also were asking about confidence in banks. And the big finding here was that digital banks and new banks, so by new banks, I mean Metro Bank style kind of banks, and by digital, we mean Monzo or Revolut. These banks are being the most benefited by all of this change because people are now turning into more agile banks. and the challenge for the big established banks will be how to catch up and basically be prepared to challenge this increase in digital channels and payment options. Our key learning from this digital topic is that organizations really need to fast forward the digital strategies and implement these new digital methods of communication and payments, because you need to be engaging with customers where they want to be. With COVID, well, some uncertainty around how long this will take. People are turning more into these contact-free options and quick ways of paying without being exposed to any threats. And this is why we are thinking that digital will be the future, a fast-forward way into the future. Also, as I mentioned before, digital security will be key, because if we can assure them that their data and their money is safe, this will be a big issue in confidence. So digital security will be one of the biggest topics to be concerned about. And this one is actually very nicely tied into our third and final topic. So next slide, yes. Trust. So trust used to be before one of the topics in which we thought, are we delivering our brand promise? Yes, no, and customers start to trust. This was very binary, if we can say it. People were feeling that trust was something you do or do not at one point in time. But actually, trust is now very much complex and multidimensional. As you can see here, when we are asking about trust, people are thinking not only about, are they delivering the promise, but is it safe to interact with this company? And this is physically and digitally. Can I trust them to put my well-being before profits? Are they really concerned about me as a human? Will my data be safe? So that's one of the biggest concerns. And also, are these people really credible when talking about ESG? And ESG is one of the biggest topics also coming from this analysis. Any social, environmental obligations that companies have needs to be super clear with customers, because they are really expecting us to be responsibly across different factors. These multiple dimensions that are now associated with trust will allow us to gain customer trust, and we really need to understand how our consumers are feeling about this, because some people will place more importance into safety, some other people will place more importance into ESG, but at the end, they are expecting us to be handling all of these topics very well and having a good balance between all of those. So, next slide, please. Thank you. So at the beginning of this COVID process, we saw when we were evaluating trust, we saw that people were overall having more trust in different industries, and that was fine, because we saw many companies that did a really excellent job at the beginning, setting clear expectations. They were helping local communities, and they were putting people first, both consumers and employees. And this had a very big impact on how consumers felt and how they started to see, almost for the first time, people were put first instead of profits. And we were really concerned about safety and to do the best for them. Acting in my best interest is key. And this is one of, in Nunwood, we look at the 6 pillars, which is the customer experience best practice. And one of our golden rules is act in my best interest. And this is now becoming much more real than ever, with people feeling that companies need to do more about their employees. They need to do more about us as consumers, and really show genuine care about us. Another point that happened at the beginning of this COVID situation was consumers were really understanding. They were patient. They were genuinely worried about employees too, and they didn't push companies hard. They were understanding that this was a hard time for everyone, that people were really trying to adapt as quickly as possible to these new realities. And this is why many KPIs for different companies. I work with a series of clients, and we could see that consumers were actively expressing that they were happy with the service, that they were understanding this was a difficult situation across different channels. So they were, let's say, more happy about the service they were receiving in these circumstances. And that's why net trust was positive. However, we were looking at the recent data that I told you before we are running constantly, and the sneak peek of the future and future reports will be that actually trust is starting to decrease. So net trust is now becoming more of an issue because, okay, we already are over that hard part at the beginning, and people now are starting to, it's not that they are trusting less, but they are expecting more. So we really need to make sure that we are continuing with the good work that was done at the beginning, that we are satisfying expectations and adjusting our offering as businesses to help consumers trust us and feel that we are still doing the best for them. Grocery and non-grocery, so retail overall, were the biggest winners of this confidence issue. At the beginning, people felt that they were the quickest one to react, that they were doing the best, that they were placing people on top of everything else. And this had a really positive impact on how they were trusting. They had positive trust scores. Of course, the transport or, well, airlines, hospitality sector was the most affected because of how things were handled with flights, refunds, vouchers. We all heard about those cases. Now that trust is starting to change, and we can see that it has fallen across 10 markets already. It's not dramatic falls yet, but we are seeing a trend in this. Grocery and non-grocery, so retail, is actually being affected, and people are, as I mentioned before, no longer forgiving, but they are now expecting us to deliver the best we can as we are approaching this new reality. So that's where we need to focus our efforts. Other industries like entertainment, cafes, restaurants, as I mentioned, or transport that were also deeply impacted will really need to reassess how they handle the situation and work on best strategies for the future. Our main takeaway from this trust issue is how organizations need to review their sense of purpose and how ESG has such a profound impact on how people are feeling. And not only ESG, but as I mentioned, is my data safe? People are willing to share the data as long as we can promise them that it will be safe and that we are using it on their best interest. So as a company, we need to understand, are we doing the best for them? And are we building trust with the right topics for them that are relevant for them? So this is where the opportunity in the future relies on for many companies. Next thing, please. The market focus one was just a nice overview of how things, if we can go to the previous one just for an overview. It's just how we saw companies doing. As I mentioned, countries are coming out of lockdown, they are starting to ease. So we did a small analysis on how these countries are behaving, and in the future we will do a deep dive on each country and how we can learn from what, for example, China, Japan, or Australia are ahead of the curve are doing, and what can be implemented in countries like in this side of the world that are just starting to come out. And the last one. So I hope these three main findings and insights gave you an overview of what consumers are feeling. As I mentioned, some of them are what we expected, like the digital one, but it's interesting to see the nuances between different age groups or countries and how they are behaving and what we can start learning to implement in our own companies. In this report, we just actually scratch the surface. There's so much data that we have that we can definitely analyze per country, per sector. As I mentioned, we did a deep dive on insurance, banking, and retail. In the future one, we will be looking at entertainment, so cafes, restaurants, cinemas, theaters, and transport and hospitality, so airlines and hotels. And it will be really, really interesting to see what's coming out of these ones that have been deeply impacted by now, by this situation. So that's all from me. Thank you very much for listening.
Thanks very much, Catherine. That was fantastic research, and I know I look forward to following it as it develops, and we see if any trends change as countries come out of lockdown, and see if those trends are here to stay.
If you have any questions, please let us know.
Absolutely. No, yeah, please do. Yeah, please do send the questions in if you do have them. Well, we've got Catherine for the whole webinar. But certainly the some of the larger life insurance institutions, which we know is life insurance is one of the largest sectors on the island, do interact a lot with Asia. So I thought it was really quite interesting to see some of the Asia trends, in particular to see how China seemed to be less focused on value for money. I'm not sure. Catherine, do you have any feel for, is that the sort of the aspirational middle class who just want certain products? They don't care if they overpay for them, or is there anything else that came out of the research? Catherine, you might be on mute. Okay. Well, I'll tell you what. Let's go to the room. Panelists, thank you very much for joining us and giving us your time today. Danny, I'll start with you if I can. Obviously, you helped found CoinCorner. I guess how much attention did you pay to the customer experience when you started that up?
Hi everyone, so I'm Danny Scott from CoinCorner, one of the founders of CoinCorner. If people don't know who CoinCorner are, we're a Bitcoin exchange, so you can come and buy and sell Bitcoin with us. So to answer the question there, I think coming from an industry like the Bitcoin industry as well, it was a brand new industry. It was an industry that was beginning to grow at the time, back in 2014 when we launched. And at the time, we actually, the focus was heavily, as a short answer, the focus was heavily on the customer experience. One of the big things we did notice was a lot of the competitors originally, we actually started the exchange purely out of the necessity of being able to buy Bitcoin in the UK, because the market was beginning to grow, but there was no real competitors there. There was a handful of small ones, and we kind of joined in with them. But what we initially spotted was we launched with people being able to buy Bitcoin purely with a bank transfer. So you come onto the website, you make your bank transfer from your bank account, and from that point, you would then be able to buy the Bitcoin. Now, people are not used to doing that online, especially back in 2014. They were used to going on a website and using their card to deposit or to buy a product. So what we found was initially, the first couple of months we began moving, and we only had bank transfers, and it was very much a focus on, how can we make this experience more easier for customers, but also more what they're used to. So we did eventually, about 3 or 4 months down the line, we were one of the first Bitcoin companies in the world to add cards to the deposit method, effectively. So you could use your bank card to come and buy Bitcoin rather than the bank transfer. And that dramatically increased the conversion rate and increased the customers coming back to us and effectively and to us. So yeah, the customer experience from the beginning was a heavy focus.
Yeah, and it's interesting because that's that trust thing, isn't it? I think we're all a little bit suspicious sometimes when we have to do bank transfers as opposed to credit cards or debit cards. But did you notice the consumer sort of activity, did that change during COVID? Was there a difference in trends or?
So yeah, during the COVID sort of time period, I think from the March 13th or 12th crash of the stock markets, that had a almost instant impact to ourselves. We saw a lot of new customers coming through the door, big volumes coming through from people effectively looking for exposure to Bitcoin. Now, whether that be people treating it as a safe haven asset, which I know it's thrown around quite often. People were unsure whether it was a safe haven asset, and that's hopefully the last 3 or 4 months have proved its worth, I think, against the likes of gold and other assets that are treated in a similar manner. So during the sort of March, April, May, June time, we've had our biggest months to date in the last 6 years of running during that time period. Again, it's kind of it was spiked quite heavily during the March period. April, May started to simmer a little bit, but still very strong. And June simmering a little bit, and then still big though. So yeah, the returning customer rate was big, people coming back to buy Bitcoin, but also the new sign-up rate of new people coming into the industry and coming to buy Bitcoin. It has been quite a dramatic increase. I think off the top of my head, I'm trying to think back to some stats we have now. We had a roughly month-on-month increase of customers, about 20% increase month-on-month. And that's a cumulative as well over the months. So it was quite a heavy increase in terms of sign-ups and new people come to expose themselves to Bitcoin.
Yeah, and I'll make it continue for you. I hope that is a trend that you see in the future. And Chris, Katherine discussed the idea of the consumer moving into a more digitally savvy world, which I think we'd seen before, but it certainly feels like it's accelerated. I mean, what have you seen on your side around customers evolving their digital journeys? And
hi, yeah, I'm Chris. I'm the CEO of PDMS, and we're a really business-to-business software engineering business. So what I see is really how our customers behave, but also the impact of the approach of the large government and commercial organizations we work with, the effect they have on the opportunities for customers to go digital. And I think the point I'd want to bring out on this is that really for the last 20 odd years, the main drag on consumers moving to digital has really been the way in which large organizations, public, government, regulatory, and perhaps financial organizations and so on have resisted that digital change. And so that the requirements are really nearly always it's been driven by disruptive small organizations. And rather like some environmental developments, large organizations with established investment in the old way of doing things have a habit of trying to squash innovation, which doesn't really fit in with their way of working. It's sometimes referred to as there's a sort of like the immune system within large organizations which reacts negatively to change. And I think one of the things that a lot of your customers, KPMG's customers and mine, need to think about is why they block some of these things, how much people in very senior positions have been surprised by the willingness of consumers to go digital and also employees to work digitally, and really take a bit of a step back and re-examine their motives for blocking some of these kind of things, the risk aversion within the organization, and perhaps recognize that customers will move as fast as you do actually on digital journeys. And I think also the conversations we had prior to this were kind of even about different demographics and age groups. If it's there, it's easy to use, and I think if you can trust it, and I don't think Katherine talked about trust. I don't think you can overstate the importance of trust. And I think that one of the things that a lot of large organizations do is they squander the trust they've already built up by their reluctance to make the moves to be more digital and to be more joined up in that way.
I think certainly some of the large corporates don't realise that actually they will lose trust by not becoming digital.
Absolutely right.
Savvy. For the listeners, we are going to start to do some polls now, so those should be live. We've got 4 polls we're going to do today whilst we're all talking, and then we'll try and get to the results at the end. If we run out of time, we will send them out afterwards. I mean, Chris, I completely agree with you. Your point. I mean, obviously, you're not just Isle of Man. You do sort of span a little bit wider than that. I mean, how does the Isle of Man compare from a sort of a digital matureness, if you like, versus what you see over beyond the waters of the Isle of Man?
And again, there are 2 parts to this answer. The one is the consumer, and I think consumers in the island are as digitally mature as they are in any reasonable view, and developed economy. I don't think there's any issue with consumer maturity. And I think the point about them moving as fast as they're allowed to is true. I think one of the really interesting things about the Isle of Man is that I think in some respects we're quite a long way behind in terms of the large organisations. We talk about the insurance sector, we think about government as well. And I think again, where there's a need to do it, I think we're able to move very, very quickly. The advantage the Isle of Man has always had is that it can move quickly. But I think the tendency to be a bit complacent about the need when it's so easy for us all to do business face to face. I think maybe one of the impacts of this will be perhaps to realise that actually what we need to do is get the hygiene factors of being really good at digital right, and then enjoy the fact that the face-to-face stuff is more about the human interactions and more about celebrating the business we do rather than about doing the business. That should be digital.
Yeah, that's really interesting actually, because so I've noticed the last couple of weeks I've been in town a lot more. Sort of the quality of the time when you have coffees or lunches with clients and contacts is actually probably better than it was pre-COVID, because there is an acceptance. Actually, you don't have to cram as much business as usual conversations into it. You can quite easily just do a 15-20 minute Teams call and no one has to leave their office or home if they're still working from home. So no, I completely agree with you. Let's touch on trust for a moment. Bitcoin's obviously had its ups and downs with trust, but I think as you rightly pointed out, around the safe haven point, perhaps there is more trust growing in it. I mean, what have you done, Gunny and Sam, around creating trust? Because clearly that would be a key point for your business.
Yeah, I think trust was an interesting one early days for us, because obviously we're a startup company, an unknown company.
Yeah.
And you have to create some form of trust around the company, but not only that, you've also got the trust around, as you mentioned there, the Bitcoin industry in itself. It did go through some hot days of various things, and it's come out the other side. Hopefully now, as we mentioned there, potential safe haven asset. Early days with the company, I guess a lot of the trust was built, we felt, using ourselves and our faces. We found a lot of the competitors were staying anonymous or hidden behind the website, and they weren't bringing themselves forward to say who's running this company. So the early days, that was our sort of plan of attack to help build the trust and who we are, show our backgrounds, don't try and hide anything, and we were very public in that respect. That's kind of continued throughout the business, and we've always been a public face as such. I guess once we get beyond that piece, there's, I guess, another angle of credibility in terms of the lifespan of your business. As the time goes on, the trust builds, the longer you survive, effectively. So we were trying to also build a relationship with our government here, with the Financial Services Authority, and we built something there, which was good. And we did eventually fall under the Business Act back in 2016. We were one of the first companies again in the world to fall under any formal regulation for a Bitcoin company. So that's the sort of thing we drove towards, to try and sort of build the trust in the company, in ourselves as individuals as well. And we drove on that aspect of it to really push it forwards.
Yeah, I mean, there's certainly connections there to why is e-gaming as big as it is on the island, and it's because they came in, they wanted to be regulated, so they could help build that trust. And I guess it would be probably remiss of me not to comment on, our profession has had a wobbly couple of years around trust, and certainly for KPMG and Big Four and the profession as well, rebuilding that trust is really important to our growth going forward, and it's very central to everything we do, actually.
I'd just like to pick up on that, because to me it's almost the most important point. And from a regulatory and jurisdictional point of view, I think the regulatory environment which assumes and understands digital will be a major contribution to the success of any economy going forward, and more, it already was, but it will be even more so now. So having clear rules and an environment in which people feel they can trust companies operating within that regime, that is something that only governments can really do. I think it's incredibly important.
Yeah, I agree. And that's where I know. So I've touched on this before. It's around could the government or the regulator locally do perhaps a bit more to help companies move along that digital journey. I'm sure we've all had those Revolut and Monzo type experiences with my passport selfie, and my account was open in 5 minutes. It'd probably take me 5 minutes to download a form and print it out for other organisations. I think it is interesting, going back to your point, Chris, around disruptors being the ones that push those larger tankers, perhaps, if you like, which is always good, and that's absolutely why you should have them. What's good to know is I can start to see some of the poll results coming in. The good news is that 90% of the listeners do agree with the KPMG research, so that's good. Although I look forward to hearing from the 10% who don't, and I understand why that is, what's driving that. What was really interesting is the results around customer behavior and customer expectations. No one is expecting to change, and is or seeing any signs of change. Half the audience have already seen it pre-COVID, which is great, and that sort of matches, I think, our research. And for us, a lot of the new reality is actually an acceleration of what was already happening before. And I guess, Chris, you commented on that with some of your pipeline of work, and I know speaking to some of the e-signature businesses and other software providers on the island, they've all seen a massive acceleration, and in fact they've had a very successful COVID, actually, as have you guys, Danny, as well. But interestingly, a third of the listeners haven't really seen those changes yet in customer behaviour and expectations, but do expect to. So it shows, it depends, be a mixture of sectors in there, but it does show that there is some more to come. Chris, can I just touch on one point we were touching on before this, which is just around we talked about this balance between the consumer and the supplier, and how digital plays into that. What are your thoughts on that?
Well, I mean, I guess anything that's a big shock to the system makes people rethink, doesn't it? And I think, and if you're not in a position, you're not having as much face-to-face contact, then you're going to be doing your browsing online rather than on the high street. And your perspective on who you trust and why you trust them will change. And I think it comes back to the point I was making about, whether it's a large bank or any really big and historically trusted brands. I think we really need to make sure that they move more quickly, because if there's one thing customers hate, it's disjointed systems. And I think, and essentially, with less human interaction, it's harder to compensate for disjointed systems. And so really making sure that you are rigorous, analyze the customer interactions you have, and highlight where the human input is essential, because it is, but also how to make sure that everything else is seamless. And I think poor integration and an unjoined up customer service experience, regardless of what the channel is going to be a much bigger problem for organizations if you can't do it by face-to-face contact.
Yeah, and Danny, I know that was a focus for your business too, around the sign-up process and I guess the speed of being able to transact on your platform.
Yeah, I think heavily important, and touched on it earlier on, in terms of creating a process or creating something they're used to and signing up on a website nice and simple, and buying with the card. We actually focused on that again from the very start, very early days of the company. Still focus on that today. We have an average, I think it's about 9 minutes on average from someone registering to actually buying Bitcoin, which starts to show, that's actually quite a quick process. And we are still introducing, you touched on there with the Monzo Revolut, you have to scan your IDs and things like that. We're currently in the process of adding that, so that all becomes automated in the background. So it's effectively start to use technology more to allow the customer journey to be seamless and less friction.
And Simon, if I can just jump in.
Absolutely.
I'm back. So
now we got technology. It's not quite perfect yet, but welcome back, Katherine.
Thank you. As part of Nunwood, we also run this research around, as I mentioned, we have the CE, which is the Center of Excellence, Customer Experience Excellence. And we do this annual survey across, it's the world, but we have a UK report. And this just digs into best practice and what a ranking of best practice companies, what they are doing, how they are handling the 6 pillars, which I mentioned. This is actually being launched today, and the report will be available very soon. And it's a very good way of seeing, because this research was just done during this period, kind of a nice continuation to our report. It will be showing what companies did, best practice, how they handled the whole situation, what customers were expecting, and what we can do to improve. So it's a nice way of just seeing how this digital and trust and this new reality will be turning out to be. So I really recommend going into that too.
Yeah, no, it's good. I mean, for me, it comes back to that trust point as well, actually, because if you make the take-on process too quick, people get suspicious. It's like
Yes.
you're not abiding to regulations and everything else. But equally, there's a balance to taking several months to open a corporate bank account. So there is a balance there, which is quite interesting. I mean, Katherine, now we've got you back. I mean, one of the surprises for me, I guess, and a pleasant surprise, I guess, was the over 64 age bracket that have really adopted digital journeys as well. Was there anything else in the survey that surprised you?
I think that was one of the biggest surprise, because when we were analyzing this by age ranges, we felt, okay, everyone will be, of course, more digital, but this group adopting website, and now we had a specific question around usage of social apps, like what I said, Zoom, or people talking about Telegram, WhatsApp. This age group was adopting these technologies much more than before, and they really are enjoying them. Not necessarily that they are buying now, but they are browsing and using. And for the bank industry or insurance, where these technologies are quite new, or they are trying to push them, I think it's a big opportunity. They won't necessarily use it fully, but it's a new way, and it's a way of teaching them and helping them to adopt technologies. I think for me that was one of the biggest findings also. And on the middle group, which I mentioned, the 25 to 44s, just because they are now using more of these new technologies like community-based or messenger apps, social media, they are still using this is all digital channels, but it's still human-based. So they have some human interaction, because you are talking to someone if you are talking through social media or messenger. So it's not that they are going fully digital and I don't want to speak to anyone anymore. It's just that they are using digital channels to talk to someone, and that's a big step.
He's come in to help drive that side of the business forwards. And a lot of that is effectively replicating what we've done for the B2C side and the consumer, and replicating that trust across to the B2B side.
Yeah.
Do you want to jump in, Sam, with anything else?
Yeah, I don't think so. Well, yeah, we've had a lot of interest, I think, from companies seeing the consumer attitudes change because of COVID and move towards sort of different ways of paying digital wallets, that cryptocurrency or Bitcoin, which is our B2B service, and is another payment method that companies can consider. And it may be one that might be a bit further ahead in the future for widespread mainstream adoption. But we've actually had a lot of interest recently from companies that are looking to be first mover on that point, whether it be e-gaming or different industries where the demographic of their customer fits closely to the Bitcoin demographic as well. Yeah. So CP, for example, and other mainstream, even furniture companies as well, that we now have accepting Bitcoin. So that's been a real interest to us. And I think in some ways it's been pushed by COVID and the situation that we've had recently further forward on those types of companies' agendas.
Yeah, I think sorry, just jumping in as well. It relates to the trust aspects that we're talking about as well, to the consumers. The trust is the same for the businesses. We work closely, Sam touched there on the e-gaming sector, and obviously it's a big sector on the Isle of Man. And we've been working closely with the GSC here to allow the gaming companies here to be able to accept Bitcoin. And that trust that we've created a relationship with the GSC here has given the gaming companies comfort and trust in us, that we're doing things correct. And again, it's the regulatory aspects, and as you touched yourself, Chris, on earlier, and it's for the government there to help drive that and help ourselves to be able to innovate and move the way that we see the industry.
Yeah, it's great. Unfortunately, we're running out of time, so I think actually we could have kept going on this one for quite some time. But interestingly, the poll is the final results there on the poll, which is 91% believe trust is very, very important. What's really interesting is we work with some of our clients over the summer period traditionally, as they do their strategic updates for the year. Not often have I seen in a strategic review, how we're doing on trust and customer trust. So it's quite interesting. Everyone agrees with trust, but actually how much focus it gets sometimes, I do wonder. But thank you very much to all of our guests in the room. Thank you to Katherine, to Danny, to Sam and Chris for all your contributions. As always, the webinar will be available this afternoon on kpmg.co.im webinars for those that can pass to colleagues or want to listen to it again. But if not, we'll see you next week, where we focus a bit more, again, digital focused, but focus on perhaps